Good afternoon, everyone. Thank you for joining us for the April Pork Producer webinar. I'm Angie Krieger, Vice President of Domestic Marketing for the National Pork Board. I'm excited for you to join us today and hear from our great lineup of speakers. Our three experts will provide insight into how National Pork Board is using data to grow pork demand and what the volatility in the current markets means for pork producers. If you go to the next slide, our speakers today include Kiersten Hafer from One Mind Consulting, Neal Hull, who's on staff here at the National Pork Board, and Dr. Scott Brown from the University of Missouri. Next slide, please. On the next slide, you'll see we have our antitrust statement. All of the work the National Pork Board does complies with the Sherman Act. The best rule is, if you have a question whether a certain matter can be discussed, please clear it with an attorney. On the next slide, you'll see our National Pork Board disclaimer. All information presented in this webinar is being funded by Pork Checkoff funds. And since those funds are being used to host the webinar, the purpose is to facilitate your understanding of publicly available information. We believe that the pork industry and ultimately consumers will benefit from a better understanding of the economics of pork production. The views expressed by the guest speakers are theirs and not those of the National Pork Board, which does not advocate or endorse any particular production or marketing direction. Next slide, please. Please note that our speakers are saving time at the end of the webinar to take your questions. If you submit your questions using the Q&A function at the bottom of the screen, I'll be monitoring those to ask them on your behalf. And with that, I would like to introduce our first speaker, Kiersten Hafer.
Thank you, Angie. Thanks for having me today. Excited to speak a little bit about pork and some of the success that we've seen over the last year. If you could advance to the next slide. So there is some great news for pork and meat overall. In the pandemic, we know that the way that consumers cook, shop, and eat all changed, and that was great news for pork. As you'll see here, all of meat was up 13.4% through the pandemic period. So that is from March 8th through 12/27. And pork pounds were up 15%, edging out turkey and chicken, and just behind beef. So we had some really strong performance. And as you'll see on the next slide, we made it into more households. People were buying it more frequently. There were higher spends per trip, and the basket ring when pork was in the basket was higher for retailers. We also know that pork made it into much younger households and made it into consumers' mouths. So Gen Z and millennials were buying and consuming a lot more pork than previously. On the next slide, you'll see that COVID really did change and reshape the way consumers interact with products, and it in particular impacted fresh. Major factors that were top of mind were things being home-centered with stay-at-home orders. People were forced into their homes and forced to cook 3 meals a day. They were looking for engagement in the community. There was a lot of economic uncertainty with people being furloughed, losing jobs, and just not sure how long the pandemic would last. That really created new needs and new behaviors. And all of that boils down to cooking at home more, looking for balanced meals, seeking trust in the people and the products they buy, stretching their dollars, and looking for some convenience-driven innovation in products. On the next slide, you'll see that consumers were craving meat, and they were craving different cuts. With cooking 3 meals a day, they were looking for variety and different meals to put in front of their families. A year later, they're still buying more meat. 43% of shoppers are still purchasing more meat and more cuts than they did previously. On the next slide, thank you. And you'll see pork is winning with consumers. So we're winning on a lot of factors. Bacon and ham really rise to the top for taste good. Good for me and my family really resonates as we think about ham and pork chops. Tenderloin is ranking high for easy prep, and pork chops and bacon are doing very, very well on routine and versatile. So we've got a lot of winning cuts and a lot of loyalty with consumers. And on the next slide, you'll see what we expect for trends in 2021. So as we think about some of these newfound skills and cooking at home, we think that will continue, but we know that people will look to food service and restaurants for healthful eating, comfort foods, spicy foods and flavors, as well as global foods and flavors. So as we think about balancing their newfound skills and returning to dining out, these are the things that we can leverage both in our consumer marketing, in our retail sales, and at store level, and within food service on menus. And Neal's going to talk a little bit more about some of the recent wins we've had for pork, both in retail and food service. Over to you, Neal.
Thanks, Kiersten. And it's certainly a pleasure to join you today and represent some of the great work that your channel team is doing here at the Pork Checkoff. So we'll start with food service, because really what 55% of consumers are saying is they are ready to return to restaurants. So as you think about stay-at-home orders starting to ease, the vaccines continue to roll out. There's this pent-up demand to really go out to restaurants. And I wanted to highlight one today, which launched last week, and it's a promotion with IHOP, and it's really bigger than bacon. So we started working with IHOP in 2019 and really supported the food service industry, which helped to inform them of the launch that they did last week. And it's really called their Bacon Obsession menu. So they've got a new bacon that's 5 times thicker than traditional bacon. So they've got that offering. They're offering a steakhouse premium BLT. They've got candied bacon pancakes, and you've got a bacon maple milkshake. And what you'll see there on the slide is the iconic blue pork logo is throughout all of their promotional materials, both in the restaurant, online, and all of their social communications. Next slide. And really, their VP of Culinary and R&D said, we want to own the bacon category. Bacon is our French fries. 50% of our customers order bacon, so we're taking it to the next level. We, for a long time, have owned the breakfast segment with bacon, but really the awesome part with what IHOP is doing is they're taking bacon beyond just breakfast and adding it to other day parts. And you see the quote there on the screen from their senior manager of brand marketing that says, we are so grateful to have the Pork Board as a partner and are excited for what's to come over the next few weeks. And early indications are they're getting lots of media, they're getting lots of consumer support, and we're excited about what not only this promotion will do, but with the relationship that we're building with them down the road. On the next slide, you'll see a promotion that we did in January with Sam's Club. This was a nationwide promotion where we partnered with Kinder Seasoning. And the pandemic kind of changed how the clubs, traditionally you would go in and they would be sampling product. They converted to a digital demo program where the shopper would go in, there was a display with a QR code. You would scan that display with your smartphone and it would come up with this real simple, easy boneless chop recipe. And then you could add those items to your cart. It was a really overwhelming success with Sam's Club. 61 of the consumers that were purchasing did not purchase boneless chops at Sam's Club the prior 4 months, and they saw a 42% growth in sales in both volume and dollars compared to the prior 4-week average. So again, one of those ideas where as people had cooking fatigue, we were trying to make pork more approachable so they could take it home and prepare a really delicious meal. On the next slide, we've talked a lot about ground pork, and this is one item that really we saw sales surge during the pandemic. We got into a lot of households, we got into a lot of younger households, and really 45% of the households purchasing during the pandemic hadn't purchased ground pork in the prior 12 months. So we really want to capitalize on that and create that stickiness with those new consumers and provide mealtime inspiration. You'll see there's 3 recipe labels and really trying to give that consumer cues at the meat shelf or at the meat case, right? Meals in 25 minutes or less, easy appetizers, or recipes inside. And currently, these labels are in market in the Northeast, Southeast, and West in over 1,700 stores. And I will tell you that number will continue to grow as we continue to give the consumer the reason to pick up ground pork versus some of the options in the ground case. On the next slide, we've been working with EG America. They are a national convenience store chain. They have 1,800 stores, and we were working with them really pre-pandemic and working on this new breakfast sandwich called the Big Pig. Unfortunately, with the onset of the pandemic, that got put on hold until late last year. And they launched that sandwich as a limited time offering, but it was so successful that they have decided, effective April 1st, it became a full-time menu item. And I will say the exciting part about that sandwich is it has 9 ounces of pork on it between bacon, sausage, and ham. In addition to that, that relationship led into discussions around new breakfast pizzas that they launched on April 1st as well. So they've got 2 new breakfast pizzas that include bacon and sausage, and really they're expanding their lunch and dinner offerings as well. What you're seeing with convenience stores is the ones that are being successful are moving more and more towards food service. They're not making as much money selling cigarettes and gas as they used to. So they're focused on food and that easy grab and go, which during the pandemic was really a sweet spot for the convenience store segment, because as people were looking for variety in their meal routine, it was really easy to pop into a convenience store. And then I wanted to highlight just a few things that are coming soon. In Quiznos, we've partnered with them on a promotion that we're running Q4, and they're launching a sandwich called the Smiling Pig. It'll have smoked pork loin, ham, and bacon on it, and we're really excited about what that offering will bring on their stores nationwide. Dickey's Barbecue Pit, we've been working with them. We did some menu ideation sessions, and this year is their 80th anniversary, and they wanted something that would really highlight and take to the next level what they're currently doing. So what you will see at Dickey's starting on May 3rd is they're going to offer a premium build on a pulled pork sandwich. So it's going to be a King's Hawaiian bun, Dr. Pepper barbecue sauce. They're based out of Texas, so Dr. Pepper's big down there, and really a premium offering where they can trade up consumers to that new menu item. And then last, I just wanted to touch base on 4 new items that will launch in Target effective the first part of May. There will be 4 new raw or fresh pork chop items launched at Target. And the best news for us and producers is that they will be the first items at Target in the fresh pork case that have proper cook temperature messaging. So on the back of the labels, it clearly states cooked to 145 with a 3-minute rest, which is really where we spend a lot of time with our retail partners on that consumer education side. So we're excited about what's happening in the channel. We're excited that food service is starting to gain a little momentum and coming back, and just excited to continue to represent you each and every day out in the marketplace. Up next is Dr. Scott Brown with an outlook for U.S. pork markets. Dr. Brown.
Neal, thank you very much. It's great to be with you all this afternoon, talking a little bit about pork markets. I'll say I'd much rather talk about these markets and what's been much better prices than we've seen for a while than some of the tough times that we've came through in the past. So it's good to be doing a little bit of outlook. We go to the next slide. I like to remind us that demand has been strong for pork products. We are in a situation where feed costs have caught our attention, even as we've seen higher hog prices. As we kind of look at the supply side here, I'll say pork production still historically large, but slower growth maybe in front of us. And that may be part of what gives us higher prices as we look ahead. Fewer sow numbers. I still have some question about how long that continues to happen given some of the current economics that I see. And of course, China matters a lot in this discussion, whether it's ASF issues going on in China or even how they recover from COVID-19 and their demand side. It certainly all factors into what's going forward. And I'll say exports look to remain solid for pork products as we look ahead. The last point here about feed costs escalating and some more general discussion about margins from farm to retail as we go forward. They've widened as we've dealt with COVID-19 and things like social distancing and what happens as we move forward. So next slide here. Just to remind us, as you look at this slide, since 2014, when you look at all meat, and here it's beef, pork, and chicken on my graph, we went from 86 billion pounds to right at 98 billion pounds by 2019. So a quick increase, pushing a lot of additional product at consumers after what was a period of time prior to 2014 of what was very flat growth. Now, if you look in 2020, we slowed. in terms of that production growth. And it looks like to me for the next couple of years, we'll continue that slowdown. That may be enough if demand stays as strong as it's been to give us some really good look ahead at higher prices, or at least prices that stay where they are. So next slide. I may regret putting these slides up as we talk through them. I sometimes say as economists, we're supposed to put slides up that are too complicated. And so this is my slide for today for you to try to think with me through, but let's take it a little bit at a time. So if you look at the 5 bars, if you will, that's set there, all right, so those are the production measures. So the left set there is when production was declining by more than a -2%. So periods of sharp contraction. If you look at what's there, it'll say hog prices that equate to that were either 55% higher all the way down to 30 some odd percent lower, 32% lower. As you go from left to right here, so then it's the next set is when pork production was between 0 and -2% growth, the gray 0 to 2% positive. All right, so not to overcomplicate this slide for a minute, but as production percentage increases, we get lower prices. You see the X's in those boxes, just reminding us that we continue to see lower prices as production expands. Although a lot of other issues are at play that gives us this range of outcomes, if you will. The boxes that you see, so that those boxes contain 50% of the outcomes, if you will. So 50% of the time, we're within the boxes that you see. The lines that go outside those boxes, those are the extremes. It's the 25% that are left on either side. Just to remind us, a lot of things are at play besides supply as well. So next slide, just to add a little bit to this. So you look at the very left side, you see 2020 Q2 at the bottom. All right, so let's just remember, that was probably the worst of COVID-19 with pork processing slowed down. So we had less production in the second quarter of 2020. And we also had some of the lowest prices as we were in the middle of the uncertainty. So you kind of see the remainder of the 2020 quarters as well as the first quarter of 2021, just as points of reference for you. Now, as I look ahead, next slide, the red circles that you see, all right, so be careful with those. These are the second, third, and fourth quarter of 2021, if you will. And so, for example, the leftmost red dot that you see there, that's USDA's projected fourth quarter 2020 price change relative to what they're suggesting is a modest decline in fourth quarter production in 2021 relative to 2019. Those red dots, all right, so if you look at 2 of the 3 of them, they sit outside the upper end of the bounds of what we've seen historically over the 2000 to 2019 period. I do not want to say those red circles can't happen, but pretty optimistic relative to what history has told us. Now, I'm cautious because coming out of COVID-19 and trying to do forward-looking outlook gets pretty difficult at best, but again, just pretty positive. So I don't want us to be overly bullish about where pork prices go in front of us. And I think this is a way to maybe be a little more realistic. All right, so next slide, just to add the last points here. So these might be my own less optimistic projections for the remainder of this year. And again, the left black circle, if you will, would say maybe a little lower prices in the fourth quarter, even with what's production that's similar to what USDA would have suggested. And we'll talk about it. I start here, and again, I may have been too complicated in these sets, but I want to remind us that we're pretty optimistic. We're pretty bullish generally about where these prices go. Let's make sure we take advantage of market opportunities when you see days like today, where again, we've seen strong futures prices for hogs that give us an opportunity to maybe protect some risk, if you will. So next slide, to get back to maybe something more normal, a little easier to follow. So remainder of projections for USDA. So those red dots, they align to the second, third, and fourth quarter of 2021 squares that you see here. So USDA is saying a little more than $75 for the second quarter, still above $70 for the third quarter, and about $59 for the fourth quarter. Just to give us a point of comparison, the highest we saw back in 2014 was Q3 at 83.30. So those prices, again, that we see forecast could certainly happen. But if you go one more slide, now think about the black circles that I had on the previous slide. So now those set in this same graph. Is there downside risk in these markets? And I say absolutely they are downside risk, especially coming out of COVID-19. But this gives us a little bit in my mind of the risk that's at play. We could have extremely strong prices. So we want to be careful about taking those highs away from us if we continue to move higher, but we also want to be careful on the downside. We could see some pretty quick adjustment as we get in the latter part of 2021. Next slide. We're looking at quarterly pork production growth. And again, these are USDA estimates. I only wanted to make one point here. Be careful as we see a lot of folks that are going to compare this year or this quarter relative to a year ago. COVID-19 created a lot of very strange paths for us. So what might look like an abnormal change in, let's say, things like pork production growth. So for example, in the second quarter, up nearly 6%. That has a lot more to do with just how much we were down in the second quarter of 2020 than growth in 2021. So be careful with all those percentage changes that you're going to see relative to year ago levels. Next slide. So a couple of simple things here in my mind. So when the black line, total exports of pork out of the United States, grows faster than the gold line, pork production growth, and again, this is change relative to a year ago, that's all good. Black line above the gold line says we are pushing less product at U.S. consumers. A year like 2020, when we exported more than a billion pounds of additional pork to China, really led us to where that export growth was stronger than production. If you look at 2021 and a little bit of my projections into 2022, I'm thinking exports to China will be down. We'll look at what's been happening so far year to date for 2021. And it's nice that maybe production is corresponding to those lower export projections as well. Again, not a lot of change relative to 2020, but flattening of production growth and export growth. It's nice those are in tandem. Next slide. We have fewer sows. USDA reporting about 6.2 million head of sow inventory out of the last March report that we got. I will say declines in places like Missouri, Iowa, Minnesota, North Carolina. If I look out my window in Missouri, I don't know if I see 40,000 less sows today, as that USDA report would have mentioned. So for me, I'm curious just how quickly we might see a turnaround and some recovery in that, especially given some of the prices that we see today. If you look at the next slide, supplies certainly have been tight here in the near term. I think pigs per litter has mattered. Disease events, PEDV and PRRS perhaps have slowed some pigs per litter. But if you look at this pigs per litter for a minute, I will say we've almost come back to the trend that we would have seen really 2015 through 2019. So perhaps we're more on trend than anything. Now, having said that, we were down pigs per litter in January and February relative to the previous year. But when you look at the March numbers, we were back above previous year. So are we finding ourselves turned around where pigs per litter will continue to grow relative to the previous year? If so, maybe that gets us through some of what's a tighter supply situation than we've seen for a while. Next slide. I don't want to make too much out of this slide, but when you look at hogs and pigs reports and you look at kind of this calculated, what I've dubbed hog death loss, it's really hogs that we've lost. So beginning inventory of hogs, what's pig crop, how many hogs did we slaughter, what was that ending inventory look like, and then also net trade changes in hog inventory. So if you look back, that over 4.5 million head number that sticks out would have been second quarter of third quarter of 2020, it tells me that we were losing a lot of hogs. Maybe some of those hogs were euthanized, but we were finding ways to really cut by what's an implied much higher hog death loss number. But you see the second quarter of 2021 here. Again, we pushed past 4 million head. Is that just how tight we've gotten? Have we seen that pigs per litter affect this number? Or we're going to see USDA come back and do some revisions. I just remind us that's another quarter of some pretty high implied hog death loss that has tightened up the supply side immensely. I'm curious to watch that as we go forward. All right, so next slide. We start to focus a little bit more on the demand side. So weekly pork shipments, not sales to China. So through the 14 weeks, you've seen we've been between 10 and 13,000 metric tons of weekly shipments. That is below the 2020 level that we've seen. I'm curious to watch as we get a few more weeks out to see if we can get above year ago levels. But we've started slower. It kind of corresponds within this projection of 2021 pork exports, roughly equivalent to 2020. If we go to the next slide, kind of everyone else, if you will. So this is other markets except Mexico and China for us here. You see a little bit of growth here, but again, we haven't seen a big increase relative to year ago levels for everyone else as well. If we go to the next slide, just to see what's USDA suggesting for 2021 pork import projections. So global imports, you see they're suggesting China will be down slightly. ASF matters a lot in making that projection. If ASF takes a bigger grip here, I think we could talk about what are maybe higher imports into China. I want to shift all the way to the right side of this to the other category. So countries like the Philippines stick out here in that other category. You see the green bar there actually shows a little bit of growth according to USDA for 2021. I think we have an opportunity to talk about more pork going to the Philippines out of the United States, as well as overall growth in global imports. So next slide. Futures contracts. So I want to back us up here to the kind of left side of what I've got as a June 21 lean hog futures contract. You know, we were trading about $80. And if I remember the discussion even back in December, a lot of us were saying that was a pretty good price, especially relative to maybe what we thought we were going to see. And now we sit back above $1. We have strong increases going on today. When we look at those lean hog futures contracts, to me, those are opportunities to manage risk. Let's make sure that we take advantage of those opportunities. We could push higher. To me, the COVID-19 recovery is interesting and tough to predict. And I'll say it this way. I think the other speakers earlier were certainly talking about just how folks are ready to get out, consume meat products in restaurants, strong demand. I'm ready to travel. I'm ready to be out. I'm ready to be over with COVID-19. But on top of that, pretty strong stimulus that we continue to have sent out thus far. And I think you have a combination where we have pretty strong demand for at least a period of time. I still wonder if we were to do no more stimulus, do consumers run out of money in their pockets? And what's that do for things like pork demand? And that might ultimately affect where these lean hog futures contracts go as we look ahead. So next slide, just to shift gears for a minute, feed costs matter here. All right, so if I was a good weather forecaster, I think I could tell you where corn prices were headed going forward. USDA says for the crop year that we're in, we're going to average $4.30 a bushel for corn. I think most important to this discussion, that right-hand column towards the bottom, going out of this current year with about 1.4 billion bushels of corn ending stocks. That's a lot tighter than we've been for a few years, which could give rise to higher corn prices as we go through this year. So to me, there's a couple of things at play here. Do we continue to pick up corn acreage relative to prospective plantings? Those numbers were lower than many projected by a couple million acres on the corn side in particular. It seems to me the incentive to plant more corn has certainly been there, plant more corn and soybeans, I might add. But now it's going to depend on what kind of spring we have. And as I look out my window and see snow in Columbia, Missouri on April 20th, I think it makes some folks nervous about what corn and soybean plantings look like in some parts of this country. Yields are going to matter as well. So if we go to the next slide. So a lot of dots on this slide. So think about, we're trying to look at the demand side for a minute. If I take the very right-hand dot that's near $7 corn prices, you'll recall that was the drought of 2012. So ending stocks relative to use was below 8%, got us again right near a $7 annual average price. If you look back now, I've got a couple of dots there that are labeled for you. So 1920, we would have been at about 14% stocks to use and a price about $3.75. I again back us up to August of 2020, and USDA was projecting a $3.20 price for 2021. As the crop continued to shrink and export demand was strong, we then ended up with a stocks to use right around 9% and a price at $4.30 for 2021. If I just look ahead for a minute and say yields matter here a lot and acres matter here a lot, if I assume a 180 yield, which would be a good yield in this country, and I look at what we would do, we would probably slide to 11 to 12% stocks to use ratio in that 21 crop. So more a less tight situation than we currently set in, but probably also some higher prices, not back to those much lower corn prices that we've seen for a period of time. Ultimately, whether we have higher feed costs as we get into the fall depends so much on what kind of yields we end up with at the end of the day. But it may take us a period of time to rebuild after what was a much shorter crop than we expected. Next slide. So these corn and lean hog futures have certainly been in lockstep with each other for the most part. Again, a good day on corn as well as a good day on lean hog futures, at least for higher prices if that's what you might want. So we're going to have to watch. New crop corn certainly has been trading at a discount relative to old crop corn. Yields are going to matter in that, and it's just a little too early in terms of where we go on those. Next slide. So we are at the high end of domestic pork availability. So I don't always call it per capita consumption, but when you look at 2019, we were right at a 20-year high in 2019. 2020 was a little lower, as is 21 and 22, but relative to where we were in that, say, 2010 to 2014 period, we're pushing a lot of pork at U.S. consumers. So we need strong demand to continue to stay with us. I just point that out to go downside risk here with what we're doing in terms of pushing a lot of pork on domestic markets. Next slide. I worry about what happens from farm to retail as we go through 2021. So if you notice, all right, so the gold line off the right-hand axis, the black line off the left-hand axis, consumer prices and producer prices tend to move together, but COVID-19 changed that. When you look at the very right-hand slide, we got higher consumer prices and lower producer prices. In many cases, because of what I will say was additional costs dealing with COVID-19. I'm not sure those costs have gone away. And in fact, when you look at some of the other areas, things like plywood, that's I think quadrupled in price over the last several weeks, makes me worried about what we're doing to that cost side and how quickly we might go back to lower margins, if you will. If you go to the next slide, just to look at pork, that wholesale to farm spread has been growing the last few months as we started 2021. That continues to push higher. Again, to me, that pushes consumer prices higher and farm prices lower if those spreads stay wide. So we're going to want to watch that as we move forward. Next slide, as I try to finish up here and give us time for questions. So similar to the corn one, so think about this as now the demand side for hogs in a corn where we talk about stocks to use in price, if you will. I've got some of the dots that's measured. You go back to 1998, you see we're well to the left side of the line that I've drawn there. So think about that as a period where we were probably fairly weak on demand for pork in particular. You see 19 and 20 pretty close to the line. And then you see USDA's projection for 2021 for an annual average. That's well to the right of the line. That's very strong demand. Again, I'll say that can happen, and we have started the year with very strong demand. I might be more apt to suggest we'll push supplies a little bit higher than where USDA is, and maybe prices lower than where USDA is, but still talking about what's a strong demand year, a point that would be to the right of that line, if you will. But just trying to kind of frame where we're at, and again, trying not to make us be too overly bullish. Last slide that I have for you, just a little bit of summary. There is lots of risk. I don't say it's one-sided. I think we could push hog prices higher. I think we could also bring hog prices lower as we go through 2021. Similarly for feed markets, I think there's risk on both sides. We've got strong export demand. If the Chinese hog herd continues to recover and doesn't have a big setback from ASF, 2021 plantings again came in with prospective plantings less than we anticipated. I'll be curious to see June 30 acreage report for us on that side. On the hog side, we're tight right now. When you look at year-to-date hog slaughter, down about 3%. I want to be a little careful with that. Again, COVID-19's mattered a little bit. As we get recovering COVID-19, I think demand will stay strong. I just don't want folks to get caught in a situation where they face high feed costs and low hog prices. That is one possibility. Let's make sure we avoid that. So thanks very much. I'm going to turn it back to Angie for questions.